The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 9th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything we can to make it magical. And all we have to do is always remember that what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I am grateful for your presence here. Of course, that means I'm really here to serve you. So feel free to pick up that phone and give me a call at 877-927-6648. Internationally, you can reach out to me at 727-445-1044. Remember, if you've got a question, well, I can guarantee you one thing. Somebody else got that exact same question. So don't call in for me. Don't call in for yourself. Call in for someone else. That way, you begin your Monday with a random act of kindness, because you're going to be doing something for somebody else. And it is Magnificent Monday. Of course, this is none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 52 points. She's trading at 17,772. S&P is off 3 points at 2,052. Composites off 4 points. That's trading out at 47.39. Russell's up 2 points. DAX off 200. FTSE down 36. Gold's up $5. Silver's up 33 cents. Light sweet crude up $1.32. Leading the charge in the cavalry to the upside, it is Crane Company. CR is a ticker symbol, up 10%, up $6. Annie Pharmaceuticals, ANI is a ticker symbol. ANIP, actually, that's up 9%, up $5. Novartis is up $4 and change. IPG Photonics up about 5%, up $3.87. Esperion Therapeutics, that's up 5%, over 5%, up $3. Hasbro up $3. Eris Networks is up $3. Motorola Solutions up $3. To the downside, at Shire PLC lead the charge to the downside, off $6. You've got the PVH Corp off $6. Google's off $5. Regeneron down $5. NetEase off $4. You got Tableau Software Data down $3.84. Didn't even get a smile on that computer joke that I told earlier. I don't think I got a smile. If I did, you can go ahead and email me a smile out there. Buffalo Wild Wings having a wild ride. I think that was up on Friday, down a bit this morning, just a little outside. It's off $3.41, down 1 7/10%. Okay, let's start off by taking a look at what's going on inside of the 4 ETF structures out there. Let's go take a look at the diamonds. Lucy in the sky with diamonds out here right now, trading out at a price point of 177.51. What do we know about the Dow Diamonds out here? They were stretching. They were trying to get up and test that swing point out here from December the 26th. But what held them in check was this little swing point out here from the trading session of January 9th, 6.6 million shares. It was tested with 7.2, so you're moving into a swing point with volume out there. It says it ought to be back up there to at least test that level one more time. That one more time ought to take it to 179.06. If it can clear 179.06, that'll send it off into that December 26th level, somewhere between 180.19 to 180.71. So far in the retracement here this morning, volume 941,000 shares. Again, on Friday it did 7.2 million. We've been trading for about 40 minutes out here. We know that volume is going to drop off, so looks like the pullback here inside of the Dow Diamonds looks to be a little bit light, but it's really tough to say with only 40 minutes worth of trading as we speak right now. But at this stage of the game, just doing my math on it says that the pullback inside of the Dow Diamonds is a bit light. If we take a look at where could that pullback actually take it down to, it'd probably say 175 or so and some change out there in its next move on the pullback. That's what's going on inside of it. Let's go take a look at the SPY. I spy. Let's go play that game out here. What do I spy in the SPY? I spy some resistance. Where's that resistance level? Really the same trading session. That is, well, maybe not. January 9th out here. January 9th, that's kind of your resistance level inside the SPY. 158 million shares out there. That price point was 206.42. That was hit with 125 million shares on Friday, so that was pushing into a swing point with lighter volume. However, until the SPYs actually clear and get below that swing point, which would be 203.51, you just have a retracement. What kind of volume did we have on Friday? 125 million. So far, the pullback so far, oh boy, that is just horrible grammar there. So far, thus far this morning, the pullback 17 million shares. We take a look at volume 196. That is on a similar, I'd have to say, light volume as well. So far this morning in the pullback inside of the SPY. Let's go take a look at the QQQ ETF, back with 23 cents with 4.1 million shares. What did the Qs do on Friday? The Qs rejected the swing point out here from January 23rd. That swing point had 34 million shares. You were up into it with 34 million shares. So about similar with regard to volume out here. Also rejecting its TAS market profile resistance line. That's priced out at 103.65. Pullback so far this morning, 4.1 million shares after making a high with 34. 4, go 5, we'll call it 5 to 6, 30 million. It's pulled back also so far on lighter volume. That's what's going on inside of the QQQ ETF. Let's go take a look at the IWM, the Russell 2000. What's the Russell 2000 doing? That's up 12 pennies, 3.8 million shares. What did the Russell 2000 do? The Russell 2000 actually, where we're going to get the most amount of information, because the Russell 2000 tested the bottom of the December 29th swing point. That had 27 million shares on December 29th. I don't know what we're going to use for volume there. If we just said, hey, it was not a holiday trading time period and it was no big deal, well, then you'd say you were pushing to that swing point with volume. 32 million shares, basically pushing into 27 million shares. It's hard to gauge what the real volume was out there. If we look at December 31st, that too was a holiday, and that had 35 million shares to the downside out here. So maybe we can say, hey, the 29th is okay, and you were pushing into that swing point with volume, and the IW1 will be up here. Here's what we do know. We want to watch what happens when and if the highs get taken out, and that high being, is it that swing point? Let me see, 121.38, Oh, it was not. By 3 pennies, it's the December 31st swing point, and you're still trading inside that. Oh, Stevie was wrong. How about that? Well, then let's just delete that. I'll just delete that last 3 minutes out here. So you've got the Russell 2000, the IWM is trading into its all-time swing point high. That is December 31st, and that was with 35 million shares out there. You are still trading inside that level. So you got into it with 32 million shares on February 5th. You closed inside it with 32 million shares on Friday. And you got 3.8 million shares so far. Straight line math says, Johnny, 4-6-24, light volume, pushing into that swing point with light volume. Nonetheless, you close inside there. We have 2 days in a row. The third time is the charm out there. And if it's the third time as a charm, any close above 119.54 says 121.41 ought to be the move on its next move to the upside inside of the IWM. Let's go take a look at some of the sectors inside of the S&P 500. Let's go see what they're doing out here. You got the XLK, the number one sector inside of the S&P. That's the technology sector. That's up by 2 pennies. This on Friday was up with 4.7 million shares. This was moving into and testing the most recent swing point for it, which was January 23rd. That had 6.4 million shares. You were pushing with much lighter volume. You rejected it. Closed back below the low out here. So far this morning, the pullback is on 1 million shares. So the pullback a bit stronger. Volume-wise, so far this morning, inside of the technology sector, the XLK. Of course, you can't just go take a look at the XLK without going and looking at Apple. So let's go take a look at Apple on its daily chart. Let's go see what and why, because of its weighting inside of the XLK. If we take a look at what Apple is doing, Apple is trying to make a 1-to-1 A to B equals CD to the upside of 129.20. It's dealing with the swing point from the trading session of November 25th. That had 68 million shares. The first test up there was with 70 million shares. So you see Apple is pushing into that swing point with volume. Actually, the first test was with 83 million shares, and it was unable to do it. It tried to catapult. That was 70 million shares. Wasn't able to do it. It got above it with 42 million shares, back below on Friday with 43 million shares. 119.75 is the area under attack inside of Apple. Apple gets above that level, volume or not, preferably with volume. It's been pushing into that level with volume. That says a price point of 129.20 would be next in its card. I can make that 129.20 may not be its next stop. Well, if it can get above that level, 135.88, in fact, would be it. We'll see how that plays out. But if you're trading the XLK, you certainly want to know what's going on inside of Apple. Of course, it's not the it's a heavy weighting. That's also in the case of the Qs, the QQQ ETF out there. Let's go take a look at the healthcare sector. Let's go see what kind of health this has. Now, this has been one of the strongest sectors out here, and it's still, even with regard to some of its pullbacks here recently. Regeneron Pharmaceuticals, Biogen, any of the big pharmas out here, this thing has still really done no real damage to the downside. If, in fact, the XLD, I can get above December 8th, that can get above 71.43, do with more than 5.9 million shares. It's going to make a run for 79.54. I would venture to say 82.87. That is the XLV. She's just been consolidating here, just like the market, but no real damage out here. Got a little hammer candle on February the 2nd, so you're going to want to keep a close eye on 68.44. Any close below that, well, I'd say if you're long, you're wrong, but that really means you're just going to come down here and test the December 16th level. That would be 67.32. So not much of a fall from grace down there. That is in the healthcare sector, the X, L, and V. Let's go take a look at the energy sector. That's up 67 cents. We covered this during the first hour, but we'll just go back to it. It's got resistance at $82. $82 is the top of the gap down. That's the high of the session from November 28th that had 42.5 million shares. The moves up here have been with light volume. 47 million on February 3rd. Friday, though, 26 million shares. The day before that, 31 million shares. The XLV, or XLE, I should say, has some significant resistance at $82 out there. Let's go finish this off. Let's go take a look at which sector. Let's go take a look at the XLY. Why not? That's the consumer discretionary area. The XLY on Friday, up with about 4.6 million shares, closing above its swing point from December 31st. Oh, very interesting out here. Consumer discretionary above it with 5 million shares, at 5 million taking out 6 million shares, then 4.6. So not being able to take out the swing point with volume. But if it does that, that sets up a huge A to B equals CD inside the discretionary sector. So far, you're up with 864,000 shares. Watch that price point, 72.97, 20 cents higher than where we're at today. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're rocking and rolling now. Well, sort of. We got the Dow off 72 points, straight out at 17,751. S&P is off 5. I see some movement here in some of these mining equities. Let's go take a look at them. Light sweet crude up a bit as well, up $1.57. Let's take a look at some of these mining equities. Let's go take a look at Rand Gold Resources. GOLD is the ticker symbol. Let's go see how it behaved on Friday with the pullback inside of gold. 1.1 million shares to the downside out here inside of Rand Gold. This thing had completed about almost nearly a 1 to 2 A to B equals CD. This has just been a consolidation. Once you do that, you do something different. In this case here, the difference is just simply consolidating sideways. So the pullback volume-wise, really not too bad, considering this thing had volume to the upside of 2.2 million shares, which were traded into. That was back on the trading session, but didn't actually even get down to that level, the high of that level, which was January the 15th. So Rand Gold looks pretty good. Let's take a look at Gold Corp out here. GG is the ticker symbol. 1.7 million shares have traded so far this morning, up 64 cents. This thing as well, the pullback on Friday, not that big of a deal. I mean, there was 12 million shares to the downside, but this was trading into where it had 24 million shares to the upside on January 15th, as well as on the 16th, another 20 million shares. So it was able to fend off that area. What you don't want to see inside of these equities is pulling back below, in the case of gold Corp. You don't want to see it close below 21.32. That could spell trouble in River City with a capital T. If we take a look at, let's see here, what else is going on? Let's go look at ExxonMobil, see what it is doing. Oh, UNG. Let's go take a look at natural gas. Now, natural gas is up 2 pennies this morning out here. As we take a look at nat gas, is there anything here that looks bullish? The answer is no, Johnny, it isn't. Now, what I did show, and I'm going to go switch over to a different chart here, daily indexes, futures. So one of the potentials out here inside of natural gas, do I have the other thing up? Oh, I do not. Let me see here if I can pull a couple things. So I'm going to pull up this slide here, see if that's it. Was that it? Yeah, it's this slide right here. Okay, so we know about natural gas is the following. From the current slide. Okay, so here's the chart. Here's a seasonal pattern for natural gas out here. Kind of counterintuitive to what somebody might think. So without doing this, again, I've got this type of setup for with regard to the market inside of my newsletter service, and it really helps you to gauge the year ahead inside of the Dow with the historical patterns out there. In fact, it would be one of the single, if there was, if not enough, if not just the mere fact that I'm going to be doing a workshop on Wednesday, which is going to give you actionable, which is going to help clarify, you're going to get clarity. How important is clarity to you with regard to the stock market, let alone you get access to my newsletter service for the next 30 days. If there's one element of the newsletter service, and there are many, but if there's one element, if it were me just sitting on the sidelines saying, I don't know, should I sign up for this thing? You know, I mean, I know it doesn't really cost me anything. I got to put out a credit. I know. Yeah. The answer is yes. No, it's not just yes. It's absolutely yes. It is absolutely positively yes. To not do it, you would be missing out on a lot of hours of my work out there that you can go ahead and do yourself. And you got to get a lot of the data to do it. But I've got a series of charts towards the bottom of my what we call it the expanded edition of the newsletter that you could print out and you could put on your wall. You want to have those things on your wall out there. You know, you want that on your wall more than you want Jack Nicholson on any wall at Gitmo out there. So you want to actually be able to do that. Well, this is a similar type chart, but this happens to be for natural gas. Now, most people might think, this is over the course of the last 11 years. Most people might think that, oh, it's wintertime season and you got to, go along natural gas and everything. Well, the reality is if you did that, what you'd really find is that what natural gas actually does is it tends to make a peak. When does it tend to make that peak? During the middle of the winter season? No. It makes its peak right around December the 4th out here. That's this high right here, December the 4th. And then it moves lower. Take a look at this move lower. Take a look at how it moves lower here into the February time frame. So now we're in February. We're actually in February, right? We're now at February 9th. And between February 14th to maybe February, if I were going to, to February 18th or so, is when natural gas starts to make a short-term bottom out here. In fact, it actually becomes the bottom that should last through the year. We get this little consolidating time period where a nice big up spike typically. That up spike typically takes you into the trading session somewhere right around the 25th of February out there. So you take a look at that, and maybe nat gas is trying to form a low. I know it's trying to form a low out here. And we get back from this break, we'll go take a look at another reason why. I believe it's a seventh inning stretch pattern to the downside inside of the natural gas contract. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 69. S&P is off 5. Russell's down a couple of points right now. The DAX getting hit. I don't know what kind of volume behind it. 213 points to the downside. Now, back to the natural gas contract for those of you that are considering a trade here. I'm not suggesting it. What I am saying is that we took a look at that seasonal pattern out there. So it's something to keep in mind. Of course, I've been showing you that seasonal pattern for a long, long time. Used to get emails all the time from folks that were trying to take the I think they were trying to take the long position inside of natural gas, and I kept saying, gotta wait. Just take a look at that seasonal pattern that is out there. You're fighting a fire without a hose. Now, we're getting towards that time where the timing mechanism is in place. Now, you got really two potential timing mechanisms out here. You've got we're potentially, the beauty here is that you are either in your fourth or seventh wave to the downside that was formed here on Friday. Now, if you get a lower low today, that just simply continues the move to the downside. A lower low inside of natural gas would take you down below 2.567 out there. We don't have that right there right now. So if today's low does, or if Friday's low does not get taken out, you'd have a confirmed seventh inning stretch out there. You actually could, with regard to that pattern, you actually could then take now this would be an aggressive trader would do this. They could take a long position there, and they would be willing to stop it out without a doubt, without a single doubt, on a move 1 penny below. It doesn't even have to be a close, just 1 penny below 2.567 out there. That's how. Now you wouldn't put on a full position and over leverage yourself. You'd still use proper stop management rules out there, but then you would be willing to say, hey, I'm wrong on the trade, and close it out with a much smaller loss out there. So that's one possibility. The other possibility, or the better possibility, is that if there is a low that's being put in, what will show up is a bullish reversal signal. I promise you one thing. Markets are going to now, so the question is your nature the type of person where you're trying to, so-called buy the bottom tick out there? You really shouldn't make that your goal, because if you do that, you're going to get frustrated as all heck out there. So you don't necessarily want to do that. But would you have a potential signal here? Yes. But the real signal comes when the market, when the bulls and bears provide us with signals, bullish reversal signals out there. I teach that. I taught that just this past, month in that 7-week trading course that I did. You can still get access to that. If you're trading at any time period without understanding your reversal candles out there, your bullish, bearish reversal signals, and you're a technical trader, you are doing yourself the most injustice that you possibly can humanly do out there. You need to know those, and then you need to know the patterns as well out there. And then if you put the two of those together, then you would have found the holy grail with regard to trading. Well, you got that last thing out there. That last thing is proper money management. You put all those things together, you're going to be just fine. You're going to be able to play this game forever. How would you like to be able to play this game forever? And it doesn't matter what market you're in. It doesn't matter whether it's going up, whether it's going down. You're going to be able to utilize all those tools. You do not have any kind of bullish reversal signal inside of the natural gas complex out here. So the other side of that would be that you could do is you could wait. I don't even know if this is really a great trade out here. When we took a look at it, we took a look at that pattern. And what do I mean by that? Well, what I mean by that is if we go back one more time to this thing here, from the current slide, I mean, how this thing's going to make a move up, and then probably going to make just as a significant move on the way to the downside. I mean, it truly is a trade versus any kind of your better trade is to wait until you see the move down here in April, maybe right around April the 9th, and then at least you've got some type of move to the upside. That move to the upside maybe takes you into the June time frame or something like that before you see some kind of typical significant pullback. Now look at the angle of these moves out here. Don't take a look at that from a price standpoint. Use this more as a directional pattern that is out there. So, I would say, hey, the better play is to wait until the April time frame if you're looking at natural gas. Nonetheless, there is a potential out here. I may have overcovered it, but really all I was doing is covering trading in more of a specific term out there with regard to trying to put those patterns together. So look, if you'd like to access my 7-week trading course, you can do that as well. Just send me an email, steve@tfnn.com, or get in touch with one of the folks at tfnn.com, and they'll go ahead and set you up. But you can access me this coming Wednesday as I do a live workshop for you. Maybe you've got an email, maybe you've gone over the homepage of tfnn.com. It says, the VIX index, volatility trading, everything you want to know about the S&P 500. Here's what it really is. What it really is being able to utilize the VIX index as a tool in no other way that somebody has taught you how to do that. With actionable steps, with a historical look back at information out there that you can use as your friend versus your foe. What I do is I break down all of the misnomers that are out there. I'm not interested in really teaching you about the formula that's involved there. If you want that, I can send you links to a couple different papers out there that'll just screw with your brain. It'll, if you're a math wizard, you want to go take a look at all this stuff. But what I like to do is take a look at tools that actually allow you to trade, right? That actually improve your decision making out there. And that's really what the workshop is about. So how do you get access to that? That's a great question. Thank you for asking. You come over to the homepage at TFNN.com. You sign up for and you'll see a little link on the left-hand side. It's going to take you to a sign-up page for my newsletter service out there. You're going to go ahead and you're going to sign up for that for 30. You get 30 days access. It's free. Your credit card is not charged. You then get access to the newsletter service. You get access to me by email, by voice, by Skype, whatever it is, in order to help you answer questions. And we're just simply going to take a look at a set of tools out here where we get rid of all the noise. We're going to just focus on how do you use this for making decisions, not all of the minutia. And I do mean when you take a look at the big, there's a ton of minutia. And there are sayings out there and expressions where you're just like, where the heck? I was going to say something else. Did that really come from when you really look at it? So that's how I break it down into easy chunks out there. Look, if you want to teach anybody something, this is not about what I'm going to be doing here on Wednesday, but of course it is. But if you want to teach somebody something, let's say you've got to get up and you've got to make a speech, you're trying to you've got a sales call out there. If you want to really be able to teach somebody, link the known to the unknown. This is the fastest way to be able to teach anybody anything out there. So go find things that people can associate with where they know it, and then teach them something that they don't know, and then link the two together. Because when you do that, then the light bulbs go off faster. When you start to try to teach somebody and you don't link the known to the unknown, that's where people get confused. It's why you get confused. It's why each of us get confused. And we're trying to solve problems, all right? What we're always typically trying to do, not always, what we're mostly trying to do is solve problems in your head. All right? I mean, how many, put your hand up if you try to solve most of them, and think of the problem that you've got now, whatever your biggest problem is that you're dealing with, and each of us have got a problem in life. If we didn't have problems are nothing more than opportunities. Okay, so some people are like, I got too many problems. No, it just means you got lots of opportunities. It's just a different way to be able to take a look at it. Now, go take a look at the biggest opportunity that you have, the biggest problem. And most people, why they get stuck is because they try to solve that in their head. Now, just go ahead and take out your pad of paper and solve your problem on paper. Go find somebody that can help you solve that problem out there. That's really what it is that you want to do. Don't solve. If you could have solved that problem in your head, you would have done it already. You got to solve it in your heart. You got to solve it in your eyes. You got to put things down. You got to understand your options, and don't give yourself two options. You give yourself, if you've got a real issue and you can say, I can do A or B. Don't ever do just A or B. Don't put yourself in that corner, because when you have, if you've only got one choice, you got an ultimatum. You're screwed. Okay, you can be more creative than that. If you only come up with two options out here, now you got a dilemma. Which is it, A or B? Choices. Have to have at least three or more different options out there, and then you'll be able to guide yourself more clearly into what it is that you should do. Anyway, sorry to get on that pitch out there, but look, I'm here to assist you, and we all got to go through all this stuff together out here. So, anyways, let's go back to these markets. Markets really haven't moved much. So, what is it I'm going to talk to you about? Light sweet crude is moving a tad out here. That's up $1.67. It's trading out at 53.30 as we speak right now. What light sweet crude is trying to do is just take on its swing point here from February 3rd. That high is at 54.24. There's 511,000 contracts on that trading session, and that level is going to be hit. You got 584,000 contracts. So you've got price moving into a B point with volume. That says price is going to go up and test the $58 level, or should go up and test the $58 level. Of course, light sweet crude is volatile. Anything can change on a dime out there, and that is a possibility. Hey, speaking of crude and natural gas, let's go to Lou in Nashville. Lou, thanks for calling. Thanks for holding. How you doing this morning?
All right. Looking at crude.
Yes.
Thinking of going long. And what's happening with natural gas? That's a surprise with the weather the way it is.
It's natural gas, Lou. It's just following its seasonal pattern. Historically, in the chart that I had put up there on my screen, I'll just post it up here one more time for you. Natural gas is doing nothing more than following its normal pattern. and it has nothing to do with the weather, because we have winters every single year out here. And the snow, is kind of contained to the Northeast, I think. But this is following its natural pattern over the course of the last 11 years. Does it have to follow this pattern? No. But when it does follow this pattern, we don't even have to ask ourselves why. We just know that on average, natural gas moves down in price through basically this week. Through this week, we see some kind of short-term bottom. Then we see a bounce up, and then we see price come back into this level. And we don't really see natural gas make a low until the April timeframe. Specifically, that low that I would be taking a look at buying is right around April the 9th, is my opinion. And that means we're starting to go into summertime out there. And that's just the way that natural gas trades on average. But what you want to do is you want to trade natural gas based on, some type of pattern that is out there. The seventh wave to the downside, a G wave inside natural gas. That's a great tool. That's a great mechanism, as part of the Chapman wave out there, because it says your back is truly up against the wall. And you get one tick below that, and it says, okay, now I got to look for something else. Looking for some type of bullish reversal signal. If you're looking to go long, that's what you want to go ahead and do out here. Somebody posted in the den, great statistic. Natural gas is 4% lower demand than average as well out there. So just supply and demand, not pushing things to the upside. In the case of light sweet crude, we're getting a bounce out here. And light sweet crude, the bottom was the buy was a couple of days ago. It was February 5th out here. As price had pulled back on the 4th, it was just simply making a 0.618 retracement level. So my clients and I, we went long on a light sweet crude on the morning of February the 5th. Now you've got a light sweet crude pushing into a swing point with volume. So it's likely going to take out the 54.24 level, and it's probably going to make a run to 58.02. In the 58 area, it's going to run into major significant headwinds out there. And I don't know if it's going to be able to crack above that. If it does crack above that, then you're looking at a fairly significant move to the upside, potentially inside of light sweet crude. You could actually see light sweet crude move up to $65. Right around there, and that becomes a real possibility. But the real key will be what does light sweet crude do, Lou, when it gets to that level, when it gets to that 58 area? If in fact it does, I don't have any guarantee that it will, but it looks to me like that's what it wants to do out there. So at this stage of the game, if you were saying, hey, I'd want to go long now, I don't know. You're too close to the swing point high, and this thing could see some kind of rejection at 54.24. So I'd say you're kind of like, the buy was a few days ago, in my opinion.
Okay, Steve, I got you. Thank you.
Okay, you bet. Thanks so much for calling. That was Lou in Nashua. That was take a look at the oils out there. Now, Dow's off 81. S&P is back $7. What is interesting as I take a look at the stock charts out here, I look at the information that the market is providing to you. We got the VIX index. The VIX index right now is traded at 1906. It is trading above the 50-day exponential moving average, 1765. That is never good for bulls out there when you see that take place. So that's a number you want to watch, 1765. Now, on the flip side here, with regard to the type of pressure, what's going on underneath the covers out here, so far so good, but some continued selling pressure out here inside the markets. New York Stock Exchange could, it's not yet, could actually see its price oscillator dip below zero. Right now, it's not down that far. It's only down to the 29.46 level, but if it gets down to zero, says that the sellers would take control of the ball out here. Buyers have had control of the ball ever since the trading session of January the 30th out here. And this really holds true for the composite as well. So far, so good, but its price oscillator does really need to stay above the zero line. In the summation index, we've been in a very choppy market here. Obviously, a horizontal trading range out there. I'm just going to say that the horizontal trading ranges are probably even better to pay attention to than anything else inside of the market. We know that the Dow had broken through its descending price channel. Maybe it just simply pulls back and it tests the top of that, and it rejects that area and then moves higher. On the other hand, if it moves back into that descending price channel, then that says that the breakout was a false breakout, and it can move all the way back down to the bottom of the price channel. Now, you know that my call and my view and reading the charts out there, if you listen to the show, has been a bullish bias with regard to the charts. I will tell you that my clients and I, that we closed out our long trade in the S&P 500 on Friday afternoon. And, of course, we did it for good reason, and so it's really not much of a surprise to me that the market is pulling back. The question is this a retracement, or is this going to be a move down to the bottom of its trading range, that consolidation pattern? I don't know the answer to that, but we're going to find out soon enough. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 72 points. S&P is down 5 right now. So let's try to round out the trading session, see what things we should be taking a look at here. First, let's take a look at longer-term time frames. Where are we at? We take a look at the weekly chart here on the Dow. What do we know about last week? Where we were inside the S&P? I'm sorry, I said the Dow, the S&P 500. We know that the S&P 500 did here last week as it got back and it tested the 1968 level, 1986-ish type level. That's your green horizontal line going across my screen. So the significant level of support has held. We just simply have a consolidating sideways market out here. That's all that is going on as we speak right now. Nothing's fallen apart. We're up towards its high, say the all-time high inside the S&P 500. It made a high of what? 2,093.55. You're 2,049. I mean, come on, give me a break. We're 40 points off the high out here. Very likely what the S&P wants to do is make a run to this 2131 level. That's the top of its next horizontal trading range boundary line out here, 2131, 2160. We know that over the long term, the S&P wants to move to 2350. We're in the favorable seasonal cycle out here. Just like we took a look at natural gas out there in its seasonal pattern, the market also has a seasonal pattern here. Prices, the sellers have tried to punch price down and get through that horizontal trading range, and they have not been able to do it. And every time down there, they've done it with light volume. At this stage here, there's nothing to indicate that they're going to be successful at even doing that. So the trend on the weekly basis, it's still to the upside. That's inside the S&P. If we go take a look at the Dow, we're going to see really the same type of thing out here. Up will pop the horizontal trading ranges. In fact, horizontal and monthly, even though we're looking at a weekly chart. What did the Dow do last week? Big wide-ranging bar out there. Do those things mean anything? Of course they do. So you had price moving up, and the rejection here inside of the Dow, its third test of the weekly primary or horizontal trading range is the 17,171-ish type level. And then we saw price get above its actual monthly horizontal trading range number, which was 17,737. You're at 17,745 right now. Hey, if that number can hold, that's a monthly number. The bottom line, as long as 17,171 holds out here, price should head to the 18,290 area. That's inside of the Dow. If we take a look at what's going on intraday, so now let's go from weekly to ultra short term, right? But we're going to use the same horizontal trading ranges out here. And now we're going to go down. Here's your 10-minute chart out here. The 10-minute inside. Now this is the S&P futures contract. What do we know about it? Look, this thing has been down to the 2040.50 level and closed or opened 61 times already so far. That is a significant level of support. Price gets below that with any kind of conviction and then starts running into it with resistance, well, then that says that the ES Mini can move down to the 2028 level. 2034 would be its next stop on any kind of significant break of that area. Otherwise, this thing's just churning sideways out here. Not that big of a deal on the 10-minute chart. Can we see some kind of pullback in the market? Of course we can. If we go look at what can those pullback levels take us to, let's go take a look at that. Let's look at the let's go look at the S&P 500. Let me put that up on the screen out here. Where are its retracement areas? Well, its retracement levels, just simply from its last leg up out here, are from the low here from February 2nd to the high on Friday. So in order for this, just a normal retracement would take you back to 2037. That's like another 11 points, to the downside. We move down to 11 points to the downside. Let's not worry too much about it. In fact, that's nothing. It ought to pull back to 2015 if this is going to set up an A to B equals CD to the upside. I don't know whether it will or whether it won't, but maybe our man Basil Chapman will answer that question for you because he's up next. Then after Basil, we got Larry Pesavento, Daryl Martin, David White, Tom O'Brien. Have a great Monday, folks. Look forward to seeing you tomorrow morning. Hey, don't forget, get over to the homepage at TFNN.com because I want to see you on Wednesday for a great workshop. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.